Linea has been pumping hard today. After following the wider market into the red this week, it has recovered back to previous levels and appears to be primed for further upside with fresh institutional commitments like that Sharp Link deployment and ongoing upgrades keeping pace with Ethereum. We'll talk about how this zero-knowledge Ethereum virtual machine, ZKEVM, could be gearing up for a stronger phase if adoption keeps building. Linea is a ZKEVM Layer 2 rollup built by consensus to scale Ethereum without compromising on security or decentralization. Launched in 2023, it uses ZK proofs for fast, low-cost transactions, while staying fully compatible with Ethereum tools, meaning developers can deploy dApps here with almost no changes from mainnet. The real draw is its focus on being the L2 where Ethereum wins, emphasizing institutional-grade infrastructure, seamless MetaMask and Infura integration, and strong ties to the broader ETH ecosystem. Linea, the native token, powers gas fees, governance, and incentives, with mechanisms like dual burns on ETH and Linea to create deflationary pressure over time. Right now, it's trading in the low cents range, with a market cap in the low hundreds of millions, positioning it as a solid mid-tier L2 contender. Network metrics show consistent growth under the hood. Total value locked sits around $1 billion or more at times, with steady inflows from DeFi, bridges, and real deployments. Transaction volumes remain healthy, often in the millions daily, thanks to cheap fees and high throughput. ZK rollups like this can push thousands of TPS while settling securely on Ethereum. Active addresses and user engagement have held up well, especially post listings on major exchanges like Binance and Bybit. And programs like MetaMask rewards have distributed tens of millions in Linea tokens to users, boosting on-chain activity and wallet connections. Recent catalysts are stacking up nicely. SharpLink just committed $200 million in ETH deployment to Linea over multiple years, putting real capital to work here for cross-border settlements and more. That's a big institutional vote of confidence from a player focused on practical use cases. There's also a dual burn mechanism in play. After covering infra costs, 20% of remaining ETH gets burned on mainnet, while 80% buys and burns Linea on the L2, tightening supply as activity ramps. Upgrades are rolling out to align with Ethereum's latest hard forks. The Fusaka upgrade is in beta or live phases, bringing better efficiency and paving the way for Glasterdam in the first half of 2026, which could unlock even higher performance. Add in MetaMask Rewards Season 1, wrapping up recently with over $30 million in Linea distributed. And you've got fresh liquidity hitting wallets and encouraging more dApp interaction. The ecosystem feels enterprise-ready too. Consensus backing means tight integration with tools developers already love, and Linea's ZKEVM has proven it can keep up with Ethereum's evolution. From Prague to Osaka upgrades, it's staying in sync. High-yield promotions on Binance offering solid APRs on Linea staking or earn products are drawing attention. And with billions in ETH shifting to L2s overall, Linea is capturing a meaningful slice through its low costs and security guarantees. It's not the flashiest chain, but it's building for longevity in payments, DeFi, and beyond. To trade all these coins we talk about, head over onto OKX. It's a leading exchange with one of the best rankings and reputations out there. And with my link below, you can grab a bonus worth €100 and up to 200 for referring friends. They've got plenty of other rewards and goodies, massive base of alts to trade, and great security. Check the link below, and let's continue. Now, when you zoom out and put all these pieces together, what stands out with Linea is that the momentum looks far more utility-driven than hype-driven. This isn't a token ripping purely because of memes or short-term speculation. Over the near term, say the next 3 to 6 months, if broader Ethereum sentiment improves even slightly, that alone could be enough to shift flows back toward Layer 2s. Macro tailwinds, ETH holding key levels, or renewed interest in scaling solutions could all act as catalysts. In that kind of environment, Linea has room to push higher, break through recent resistance zones, and test stronger levels, especially if current support holds and whale behavior continues to show accumulation rather than distribution. Looking further ahead into mid to late 2026, the upside case becomes more about execution. If institutional deployments like SharpLink continue to scale, if on-chain activity stays healthy enough to meaningfully increase burns, and if upgrades roll out smoothly without disrupting users, then higher multiples from current levels aren't an unreasonable scenario. ZK technology is still maturing, and as it does, capital tends to gravitate toward platforms that balance scalability, security, and regulatory compatibility. Linea sits squarely in that conversation, whether it's trending on social media or not. That said, it's important to stay grounded, because risks are baked into any Layer 2 play. Competition in this space is brutal. If Ethereum mainnet congestion eases too much, or if other ZK rollups like Polygon or ZK Sync capture more developer mindshare and liquidity, Linea could easily lose momentum and drift back toward lower support ranges. Some analytics firms have already reduced coverage or emphasis on certain L2s, Linea included, arguing that not every scaling solution will end up being equally important long-term. That doesn't mean failure, but it does mean capital rotates quickly. From a monitoring perspective, there are a few clear warning signs to watch. Declining TVL, slowing transaction growth, or noticeably reduced burn activity would all suggest that adoption is cooling off. Volume also matters more than people think, not just spikes, but consistent participation. Without that, even fundamentally strong setups can stall. And of course, if the broader crypto market rolls over hard, smaller and mid-cap L2s tend to feel it first and feel it harder. So the bottom line here is this. Linea is among the riskier coins we've discussed so far, definitely not something to buy blindly. The price action says as much. It hasn't done much but go down since it launched. But that being said, it's quietly stacking institutional interest and technical progress that matter over longer timeframes. The fundamentals are there, the Ethereum alignment is clear, and if the right catalysts line up, upgrades, sustained activity, real deployments, this is the kind of setup that can reward patience rather than impulsive trading. Just make sure you do your own homework, manage position size, and stay realistic about volatility. Keep an eye on Ethereum-aligned updates and on-chain signals, because with projects like this, the most important